Good afternoon, Scott Redler, T3 Live. Welcome to today's recap. So today we gapped up about 10, 11 handles off the open, and that's probably about where we closed. That's why traders hate it after a 5-day down move when you get a gap up, because you get an oversold type move, but if you didn't take them long yesterday, it was very hard to make money today. I would say 80% of the things you bought after the open were probably not higher than where they were at the close, which makes it very frustrating. Yes, you had some standout stocks where if you had the right stock selection, you did well. I think I made most of my money actually more short today, than long. And as far as the S&P, I'm just going to get right into it. You take a look here. Market tried to take back the 50-day. First attempt, it couldn't. To me, it feels a little bit like it's too easy for people to say, oh, I'm just going to short the 50-day. So maybe people, sold some of their longs if they took it overnight into the 50-day, which I did off the bat. Some people were like, okay, I don't really love the action today. I'm going to get short here. So to me, I don't know. I think you could be mixed because there's a lot of different types of patterns working on. I think we could continue a bit higher here. This could last for a few days. So at this particular point, I think it's more of a stock-specific scenario. Market's still in a correction. We're in the midst of an oversold bounce, but we went from like negative 95 in the McClellan oscillator to about negative 50. So there's a few more days of action that we can get like this. And I kind of think before I start reshorting the indices, I think that we might see some higher prices, but that all remains to be seen. As far as stock selection and setups, there were a lot of good ones. In the morning call today, I focused on really two things. I said, you know what? I go, if the high beta tech names that sold off, if they're going to continue from their outside days, there's levels that they shouldn't get above, and they could be cute shorts. I keyed on Apple and I keyed on Priceline. I didn't trade Priceline, and unfortunately, that was the one that really paid from the short side. But let me just go over, because guys in the Twitter sphere were asking me why and how I actually did it. So if you go real quickly to Apple, you will see, here's the chart. Yesterday was that outside day right around here. Okay, remember that outside day? It traded above the high, closed below that 639.84, closed near the bottom here. Okay, and then it opened up with the futures up 10 handles. So I said 636 to 638. If you look at your 5-minute chart, the reason being was because, that was prior resistance. So if you take a better look here at the chart, let me get this out of the way. This is where we broke down from. So I said until this gap up, you probably could short 636 to 638, and it shouldn't really get above this 639. So right away, this was a nice little trade. Okay, you made some quick cash flow, but you weren't really sure, if we were going to go higher, what the story was going to be. But then after a little while, it started to, develop a bit of a range here. Okay, nice little wedge type pattern going into like 11 o'clock. Also at this point, the futures actually started going higher, and Apple showed some relative weakness, and I started talking about it. I'm like, okay, I'm going to be short some Apple with the stop at 634.50, 635. And then if you look as we went, this wound up breaking into the downside. So I think this is when I started talking about it, tweeting about it. If you're my virtual trade floor, you saw I was short Apple first here, made some money, and then I think I got out of the way, onto this rally. I'm like, okay, I made some quick money, lost on my trailer, which seems like the mantra of me. I lose on my trailers and I make in the motion. Like same thing here. I started to, be long. I was short, like I would say tier 1. And as we broke below this wedge here, or this little area, I started adding 632, added a little bit more, and then it worked its way lower. And I covered a decent amount into this area, and then, it continued where I think I might have added right here. And then on this move, I got a little beat up, but didn't give back the majority of it. And then I think, I was relatively done with the trade. As I said, I'm going to go take my spin class. So from, trade number 1, trade number 2, and then I was done with it. And then I was like, let me see what's going to go on a little later in the day. A little later in the day, it wound up going, it just wound up being somewhat of a choppy mess. But if you look now on the 13-minute chart, okay, maybe we'll even go a little bit longer, because I think I had the 34-minute chart, okay? If you look here, okay, this to me is not necessarily the case, an end-all, but this is, a bit of a head and shoulders, top type pattern, okay? And, here you go. It's not, the definition, so to speak, but here you are, okay? That's why I was, you have two little areas here. and it looks as if, you know, you could get a move lower here if it wants to. And I would say, to be honest, the last, you know, 5 times you would have thought that this could have happened, it was much better to buy on that trend line or that neckline, because these patterns only trigger when they go through, they close below, and they accelerate. You know, if they go through and they fake you out and come back above, chances are you get trapped as a short and it goes higher, and that's what Apple does. So I actually went home a little short Apple. First time I think I've been short Apple overnight in a while. Hopefully it doesn't, you know, kill me, but I made the majority of my money in there, so I have a good mark. So I took a little less than a tier 1, because tier 1 Apple you don't really want to, you know, be taking home, because, you know, I actually am on the highs of my year. I don't need any extra stress, but I think it's the right trade, so I'm trying to stay with the right trade. If you look at what happened with Priceline, you know, it was much better. Priceline, you go to the daily chart, was very similar. You know, it had that outside day, opened above the previous high, closed below. You know, it triggered once it went below the low here, which was a 739, and went all the way down to as low as 719, almost, you know, 20 bucks, and now it's coming into the 20-day. So at this particular point, you know, you'll see what happens. Sometimes you get a little bit of a rollover here. You know, we shall see. But Apple wasn't as weak. But you know, if it were to break this 624 to 622 tomorrow, you know, maybe it also tries to shake the tree a little bit and come down to the 20-day. Stock has only been at the 20-day one other time during this entire move, so I guess it's a little risky to be doing that, but you know, we shall see. I'm a big boy, I'll figure it out. Because you have to be a little fearful, because you look at some other stocks where LVS, that got me out of my momentum shares and my intermediate trend shares, it laughed today. It said, you're out of your stock. I'm only going to reward the macro investors. You look here at LVS, it had a really nice move. Okay, first it opened up. You know, you could have tried to do that same concept that I said. Okay, remember I said go to your 5-minute chart, look at the previous day, and here was the same similar scenario. This was the prior time that I got stopped out. So I said, okay, you know, maybe short versus 59.80, right? And this was a little different than Apple, because you could have been shorting here and then you had a cover. You had a cover once it broke above. Okay, it broke above this point, you know, traded through the support. You had to say, okay, I'm wrong. You know, I'm covering 59.60s or I'm covering 60s, because it wound up being a rock star move, you know, all the way to almost 61. And now it looks pretty strong. You know, it's like right back as if the correction in the stock market isn't really a matter, or it's not affecting this one. And for me, I have to figure out how I'm going to get back in if I am. So this is your next pivot. Okay, I kind of like this little guy, but it hasn't done its secondary yet. This Caesar, I haven't drawn it in a while, but it's hanging out pretty nicely up here. So if you're still in Caesar, I have a few guys that are in it from here that added here and they're trailing it. Next level is around 1576 to the upside. We shall see. Win, not really acting so well in the scheme of things. That's why I've been avoiding it. It's really in no man's land, so we won't even get into that. Another stock that I've liked a lot lately that I got stopped out of also, I went back to, you know, is Dunkin'. Okay, first things first, you look at this runaway train in Starbucks. You know, it's always hard to hold on to your winners, and this one, rightly so. Jill and I were talking about a straight up long here. I think I got long on this day, sold it on this day, shows how bad I am. Meanwhile, if you're an investor in Starbucks, you're very, very happy. And you know what? Rightly so. Look at my Starbucks right here. Gets me going. Hello. Sleeping back there in the control room. Starbucks. Every time I show Starbucks, they give me one for free. No, I'm kidding. But anyway, it's been an unbelievable move. So if you go back to the chart, you know, this stock, it's really interesting to see that they actually let a stock like Starbucks, a leading stock, make a new high. If we were in such a corrective type tape, if we were in an area where they said, okay, we're going to go down 10% off the highs, I don't think people would have been going after Starbucks to make new all-time highs. So anyway, I did get back into my Dunkin' because I kind of screwed this trade up. My stop should have been $29.50, but I was a little risk averse. I got out yesterday where it didn't break the IPO price, and then now, you know, it popped back up here, and it looks good. You know, it's been public now for what? Almost, you know, how many months is this? August, September, October, whatever, less than a year, but close to it. And now it's going sideways, and it absorbed the secondary, and some things are out of the way. So for me, I'm in about a tier 1.5. If it starts getting above 31, 31.20 tomorrow, I'll add to it, and then perhaps we haven't moved through those highs. Okay, this is a nice pattern here. You go to your weekly chart and you'll see it's, can't really see it that well there, but it's looking good. You know, it's looking like it's a new company. Dunkin' Donuts, we all use it, we all love it. I've been saying I think it's like a mixture between like obviously like a Starbucks and a McDonald's, because you get a little bit of both. And you know, some of these new issues have been the place to be, and this one's acting well. So if you still have it in your IRA, and I'm not a stockbroker or an IA, I said this is probably something you put away because trading-wise, it's very slow. But at times, maybe we get a good trigger. So we'll see what happens. I'm along some, think above maybe 31-ish. It could get going again. So it's something that could buck the trend. As far as Google, not much you could say about this one, except for that the earnings are going to be out after the close tomorrow, so we shall see. I do say that the highs of the year are not in. Here was that shooting star top, came back in after the earnings, tested that. Here's, you know, remember here's that 200-day we were talking about, and now it's coming back up. It's holding higher in the daily chart. You know, it's looking like it might want to go. It's just got to deliver on the report now. So hopefully it does, and then macro investors will be rewarded in Google. As far as some of the financials had a decent day. I didn't take any of them home long, but I bought a little JP Morgan right around, what was it, 43.75. So if you look here at JP Morgan, it could snap back a bit more. It actually closed above yesterday's high, which to me is a little bit bullish for the stock, because the spiders didn't do that. Actually, did the spider? No. Anyway, you know, so you have this little trend line here, so perhaps it could snap back a little bit more. So if we're going to go to maybe 138, 138.50 on the spiders, you'll probably see a bit more action here. Maybe people don't want to be short in front of the earnings on Friday, so hopefully it happens before the earnings. Bank of America talked about buying it yesterday also, right into this area. Unfortunately, I didn't buy it on the 50-day, but you know, some guys in the chat room did, some of my friends did, whatever. You know, it's right here. So, you know, 888 closed pretty well. I think it could pop back up into this 920 range. You know, first inside day. We'll see how that continues. Gold, talked about it a few times. I think it held in pretty well. You know, I'm not in gold. I'm watching it. I want to see if the direction or the intermediate trend changes. You know, during the market rally, gold came in. During this little pulling in the market, gold went up. And then today, with the market bouncing, GLDs really didn't pull in. So if it goes sideways while the market bounces, and then if the market decides to sell off and they want to buy something for a fear trade, this will be a nice little trade above 162 or 163. So it's worth being in a tier one if you have a long-term thesis in gold, which right now I really don't. If it starts breaking this intermediate trend, maybe I get more interested. Last time I tried it here, I got hurt, so I'm just waiting. And really, at this particular point, everyone's saying, oh, what happens tomorrow? You know, yesterday I had a little bit more of a just say an edge, or I had probabilities in my head that we were going to bounce based on being so oversold. I also saw Alcoa come out, so as soon as Alcoa came out, where everyone wasn't expecting anything, I bought a little spiders after hours. Today, I do have some longs. I'm trying to be stock specific of what's acting well. I also, like I said, I'm short Apple, and hopefully God be willing. And actually, you shouldn't use that phrase within a stock, because whatever, it doesn't hurt me too much with some kind of crazy announcement, gap up $10. But I think that pattern's worth looking at for maybe a cute short there. But being cute makes you ugly, and we all know that. As far as SanDisk, I want to just show you how, you know, when you have a pro gap like this, and it doesn't even attempt to fill it, typically they trend lower, and that's why I said keep it off the radar. It doesn't deserve your attention, especially since it gapped below a major channel. So a lot of people were trapped in here. You know, we all learned our lessons when we were along this day into that. That was horrendous. Thank goodness it didn't happen to us again. You know, the stock to me, it's like if it's your nemesis, stay away from it. This Ren actually, you know, it trades not really the way we like it, because it doesn't really go through new highs, you know, and then run. But it was up like 4% yesterday, 5% today. It closed relatively strong. If you go here and you look at your basic studies and you look at volume, you know, 2 big days of volume as it tries to clear this area. So I'm long some. I don't really want to talk about it that much because it's such a cheap stock. Look where it is. But here's where it came public. A lot of people got very excited. You know, I did have a guy here who runs a trading firm of 500 traders in China. He actually is from China. So, you know, you talk about concepts. So come to me real quick. They got very excited in China when this came public. Facebook is not allowed in China. This really is the Facebook of China, so maybe it does run going into our Facebook. At least we're seeing volume pickup. So I think they did announce some type of deal with Intel this morning. I didn't really look it up. I was just a little too busy. So if Intel's doing business with them, maybe they're not cooking their books the way Groupon did or whatever. So to me, I think at this spot, it's decent. He actually even said, I think, that he bought it a lot higher. So, one man's trash is another's treasure, so this could be good. If it starts building on volume, if you go back to the chart, you'll see next level here really is, 680, okay, which is a nice move from the 620-ish, and then you have 734, and then if it ever came out with, decent numbers or really wanted to go, it really has a lot of room here. So it's worth an entry. Look at the volume here. Last time volume came in, it had a decent move, so it needs volume to go, and we'll see what goes on there. As far as guys, what were guys? Oh, VMW. That was started out with some news today, but it was bought. There was a lot of different trades in there. I think it's going to need some time now. It did hold the 50-day. At this particular point, if you were in it on a macro trade, because we've talked about this being institutional quality, it did come in, hold the 50-day. I think with time, it'll be okay. So just sit tight if you're there. You probably own it a lot lower anyway. And really, that's it. I'm going to tie it up right now. At this particular point, really know your time frame, know your risk. We were down 5 days, up 1. We went from negative 95 in the oscillator to negative 50, so it's a little bit different. We still have a lot of overseas news to overcome. Tomorrow you have the claims. Let's hope some more U.S. data supports the beige book, which was on a firmer footing. And that's really it. Keep taking your trades, stay safe, and I'll see you at the morning call. Have a great night.